Guys, so good day and welcome back again to this channel. In this particular video, I'm back again with another awesome video for you guys, where I'll be breaking down the whole concept about liquidity, your transactional liquidity, structural liquidity, and inducement liquidity, and everything you really need to know. I'll also be teaching you guys advanced market structure, and I'll be showing you guys the setup I look out for whenever I open my chart, guys. You get real life example. I'll be showing you everything, and even the setup I took yesterday and today on BTC and gold is the same approach, guys. So stick with me to the very end of this video as I'll be breaking down step-by-step guide on everything you need to know about your liquidity concepts and advanced market structure. I'll also be showing you guys my approach whenever I open my chart to get the concept. So without taking much of your time, let's get into the main video of today, right? If you are new to this channel, hearing my voice for the first time, you're welcome to GilbertFX. This is a channel upload Forex educational content, and I would love you to subscribe to this channel. You get join our Telegram channel. The link is at the description down below. I do drop setups there for you guys. Even the setup I took on BTC yesterday, right? I sent it there. And most of the setup I'll be showing you like a back test. The setup I've been sending to my Telegram. You get all the setup out there. And these are basically the approach I use in catching my trades. You get, although there are more, like this is basically like a reversal setup. Also have my trend continuation, which is only available for premium student and something like that. You get. So without taking much of a time, let's get into the main video of today. You get. So I think first we need to start with the concept of liquidity. You get the concept. We need to start with the concept of liquidity, and sometimes you already have knowledge that okay, when market is going up, we have what consecutive higher highs and higher lows, higher highs, higher lows, higher highs, and what higher lows, higher highs, and higher lows, something like this, right? Now you need to understand that as this market is moving up like so, their liquidity is sitting at these swing levels here. You get all these swing levels where the market break will give you a new break of structure. Their liquidity is seated at that particular level, and that's the main reason why whenever price breaks structures, it tends to pull back. That's because price just swept a liquidity. Right now, whenever price sweep a structural liquidity, sorry, we'll get to that, but whenever price sweep a buy side liquidity, it tends to go sweep a sell side liquidity, and whenever price sweep a sell side liquidity, it tends to go sweep a buy side liquidity, and vice versa. And even if this market reverse, right, even this market reverse to the opposite direction, where we want to see what we want to see a break of this last swing low, and then we now start seeing consecutive higher highs and consecutive lower highs and lower lows to the downside, lower highs and lower lows. You also need to understand that their liquidity seated at all this level here. You get, so their liquidity seated at all these swing levels here. So in every swing point, right, in every swing point, there are always liquidity seated at those swing point. You get, like I told you previously, that's the reason when you see price break structure, it tends to do what to start pulling back. That's because price just swept a liquidity. So this kind of liquidity is basically called what? It's basically called transactional liquidity. You get, it's basically called transactional liquidity. That's why it's advised whenever you take your trade. Let's say you take your trade, for instance, you take your trade from somewhere around here, maybe an order block here or something. If you want to take your profit, it's advisable for you to take your profit at this swing high. You get the concept, because here taking your profit at this swing high is kind of a very achievable, because if this trend will continue, then this market will break this swing level here like so, to break it before it now pull back. And if this trend will reverse, then this market will get to here, form something like an equal lows. You get them before it starts reversing. So it's advisable for you to be taking your profit here, because there's a transactional liquidity here that this market needs to sweep before it reverse. You get, so this is what we call transactional liquidities, right? Liquidity seated at swing highs and swing lows. You get, and also we have what we call structural liquidities. Now structural liquidities are basically your last high before the main high, or your last low before the main low. Let's say in this kind of scenario where we have something like this, you get, we have something like this to the upside. You get, so you need to understand that first we have what we have this low for this scenario. So we have this low here, which is what our last low, and then where is our main low? So this low is our main low, and then where is the low that is closest to this one? So this is basically the last low before the main low. So this here will be what will be our structural liquidity. Are you getting me? This will be our structural liquidity. You need to be looking out in buying from inside of this point here. Reason being that if this market is pulling back, right, you need to understand that whenever price sweep a transactional liquidity, it tends to go sweep a structural liquidity. And we all know that structural liquidity is basically our last low before the main low, or our last high before the main high. And you know that okay, all these particular swing levels here, they are basically what transactional liquidity. You get, so whenever price sweep a particular transactional liquidity, it tends to do what? To go sweep a structural liquidity. So you are basically expecting this market to come tap here before you catch that move to the upside. I see many people trying to do what? To buy from this demand here, or to buy from all this demand here. Believe me, 9 out of 10 times you get smoke. Whenever you are taking your trades, right, ask yourself, you get what liquidity have been swept. Okay, since we have swept this transactional liquidity, for instance, up here, then I'm looking at price and taking out structural liquidity, and then we have inducement liquidity, right? So for inducement liquidity, let's say you have something like this, you get, let's say you have something like this. Inducement liquidity always happen when there's no structural liquidity. You get, don't forget, around here we have what? We have this other block. Sorry, let me use the right tool. So around here we have what? We have this other block right here, which we're expecting what? This market to come tap. And also here we have what? The same other block. And not only the same, but if you look this very well, you notice what we had the same structure here. You get this structure here is the same structure with this one. We have this sweep, we have this break of structure, which makes this low a strong low or a protected low. And also we also have the same formation here. But you need to understand that inducement is basically a fixed zone that will do what? Induce early buyers. You get, for this scenario, early buyers induce early buyers in order for them to think that, okay, this is the right zone. You get, they want to, sometimes you might get a reaction from this zone, of this zone, right? At the end of the day, what will you see? This market will just dump to this main zone, stop everybody out here because there's a liquidity seated here. You get, before you now see that major move to the upside. You get, so inducement is just a fixed zone. You get, it's a fixed zone, and you always see your inducement liquidity when there's no structural liquidity. You get, now check out what I'm trying to see here so you understand. This formation you saw, this is the same formation here. You get your sweep. It's a transactional liquidity. When we get into advanced market structure, you understand this: your sweep, your break of structure, and then you also have what? Your sweep, your break of structure. You get the concept. So in this kind of scenario, you still wait to do what? To take your trade from here, because this is basically an inducement zone, right? So you avoid this zone, you get to take care, because price will definitely sweep this particular zone, and then you cash your trades up like so. So it's also applicable to downtrend. You get, I'm just using the uptrend scenario so you understand what I'm trying to do here, right? So even if I invert this case, still the same thing. You get, so in whatever concept is the same thing. You get, you have what? Your sweep of liquidity, your break of structure, and then you also have what? Your sweep of liquidity, your break of structure here. And this market will induce early sellers for these scenarios for them to enter, and then at the end of the day sweep them out, tap into the main zone, and then drop to that particular direction, guys. So I believe you have been able to do what? To understand your concept about liquidity, your transactional liquidity, your inducement liquidity, and your structural liquidity. Now you already know the regular market structure. We have your higher highs and what? Higher lows, higher highs and higher lows. And if this market want to change in trend, then we have to see a break, and then we start seeing this market coming down like so. You get, so you're already familiar with this. But believe me, this particular market structure like so, it doesn't always work. You get it, it's only brought or like work a little bit on the higher time frame, like the weekly or monthly time frame, right? We have advanced market structure, like the way the market really moves. You get, in reality, once you open your chart like this, you are not going to be seeing this kind of clear market structure on your chart. You get, you see something messy, and you yourself, if you don't know what you're doing, you get confused, right? That's because this thing in reality is just a regular market structure in order for you to understand how the market moves. Like if the market is just moving, you know that, okay, since the market is pulling back, then it will get to some point, let me just buy. Like everybody would have become millionaires and probably billionaires in dollars, right? So this is not how the market really works. Now you need to understand that we have what we call advanced market structure, and the advanced market structure is basically, if you're on my Telegram, right, you would have seen that I dropped this particular thing yesterday. So this is just a video guide, although I've dropped an image yesterday. I just want to break it down, you get, for the sake of you guys to benefit. I really want to help you guys, you get the concept. So I have my type A setup of the advanced market structure. I also have my type B, and then for my type C. For my type A, this is what I really want to see first. Let's see, I have something like this. You get, I want to see a sweep of this transactional liquidity, and then I want to see this market to pull back to some point, and then I want to see this market to give me another break of structure. Are you getting me? Okay, since you have your proper knowledge on liquidity, right, So you want to see something like this. Let's say you have something like this. So this is basically what a sweep of what this transactional liquidity you get, and you want to see this market to give you what a break of structure, which is also another sweep of transactional liquidity. Now once you have something like this, you want to wait for this market to give you what a pullback. This pullback now will create what your structural liquidity, and then what do you want to see next? Another break of structure, right? So this is basically my type A setup, because it consists of what two break of structure, which is just like a double confirmation or something, right? So we have what our structural liquidity right here, you get, and we have this sweep of this transactional liquidity right here. We also have this break of structure right here, right? We have that break of structure right there, and also we have what structural liquidity created, and then we also have our second break of structure. And don't forget, since we have information like this, you need to understand that this low here is basically a protected low, right? It's a protected low because if you're taking trade from your protected low or protected high, it's very difficult for price to just easily bypass that level, you get. So you just have to draw it like so. And then if you want to draw your point of interest, you can draw it from the Quasimodo point, right? If you want to draw it from the Quasimodo point, it's still fine. But sometimes you might get a scenario where your structural liquidity is below this Quasimodo. In this kind of scenario, then you can draw your point of interest from this other block right here. But since our structural liquidity is above the Quasimodo entry, then we can draw it from here like so. Like if you're on my Telegram, you notice most of my setup and analysis just this particular market structure like this. This is not information I should be sharing out for free, but I'm just giving you guys for totally free, right? So you already have this background knowledge that since price has swept this transactional liquidity, you're expecting price to come back to do what, to sweep this structural liquidity, and then you catch that move to the upside. So this is basically what, this is basically my type A setup. You get, this is basically my type A setup. We have what are two break of structure. Then for my type B setup, right, what do you want to see? You want to see something like this, a sweep of transactional liquidity, but this time around you want to see what your structural liquidity happens first. You get, your structural liquidity happens before what your break of structure. You get, in this kind of scenario, you get what you see here is what you have this sweep of transactional liquidity, and then price creates what your structural liquidity. Since price creates your structural liquidity right here, you now have what your break of structure. You have your break of structure like so. This is basically advanced market structure, and if we get into the chart, you see what I'm talking about. And then this low here now will be what protected, and if you are taking your trade, you are basically taking your trade either from this Quasimodo, but here this Quasimodo has been tapped for this scenario, so we look out for this other block down here. You get, so here, so what you'll be basically waiting for, right? You'll be basically waiting for this market to do what? To come back, tapped into this particular zone here, sweep your structural liquidity, and then you catch that move to the upside, right? So this is basically the type B setup. I don't know if time will allow us to do what, to check out some chart example. This video is getting too long, honestly. And then for the type C setup, right? The type C setup, there's no structural liquidity, there's no inducement liquidity. Let me just show you how the type C setup looks like. Let's say you have something like this, right? You have this sweep, you now have for this move to the upside. Okay, you already established that this is basically what, this is basically a sweep of transactional liquidity, right? And then since you have a sweep of that transactional liquidity, you have your break of structure here, and then you establish that okay, this is basically what, this is basically your strong low. And then since you have a strong low there, you're expecting this market to do what, to come tap your point of interest somewhere around here. But this time around, the liquidity formation is kind of different. This is a low probability setup, take note. You get, for the liquidity formation, you always see price when price is pulling back to your POI, all right? When price has gotten to somewhere around here, before it will now give you what, this liquidity here, tapped into your zone, and then you see that move to the upside. So you can see the different formation, right? Type A setup, type B setup, and then the type C setup. Based on the liquidity formation, it will enable you to do what, to know which one is high probability and which one is medium probability and which one is low probability. You get, so this, for this low probability, is when price is approaching your POI before you now see that small pullback before price tapped into your POI. So now let's move to the chart and check out some chart examples very quick. All right, so okay, this particular trade here, I took this particular trade. I think I also sent the trade to, I think I sent this trade I sent the trade to my Telegram, right? I think it was on the 2-hour time frame or something. Okay, yeah, perfect. So on my 2-hour time frame here, I think if you look here, what do you have? You have this sweep, which is what? Your transactional liquidity. So you have that sweep of your transactional liquidity, and then you have for this break of structure, right? Since you have something like this, then you have to establish that, okay, this will be what? This will basically be your protected high. And then what next do we have here? After that break of structure, you can see that we had what? This here, this liquidity here. And we already know that, okay, structural liquidity is basically what? It's basically the last liquidity, or sorry, the last high before the main high, or the last low before the main low. So which low here among all this low, which low is the last, sorry, which high is the last high before this main high? Of course, this high is higher than this one. So this is basically what? This is basically your structural liquidity. All right, since you have this formation, now you already know that, okay, you already know that this is basically what? This is basically a type B setup, or a medium probability setup. Now usually the way you draw your point of interest, right, you draw it from this last order block here. You get this last order block, but personally I love using the closing price of that order block in order for, just like me refining my entry or something like that. You get the concept. So I just have to draw it like so, and then so we have our complete setup now. You get, since we have this setup, what do you want to do? I think I just received an alert from TradingView. My go trade have hit take profit. You get, the go trade have hit take profit, and I don't think this video will allow me to break down that trade. Maybe next video, a subsequent video, I'll be showing you, and it's exactly the same format I use in taking that trade. You given the BTC setup yesterday. So usually your setup, your stop loss is to come below or above your highs or lows. You get, but for the sake of refinement, I can just work with it above my Quasimodo. Don't follow me. You have to master keeping your SL above here before you start keeping it here. You get, and then your take profit, you get maybe your 1:5, 1:10, whichever thing. But usually you have to target this low here, this particular low here. So now let's see what happened. Let's see what happened. This is like a 1:5 risk to reward. Let's play this forward and see. Guys came back, tapped into that point of interest, you get, and then we have that crazy drop to the downside, giving like 400 and something pips. You get 430 pips or something. Again, this is like a 1:12 risk reward. You can see how powerful this strategy is. I would have shown you guys, like, there are so many examples all around here. You get so many examples, but for the fact that this video is too long, I think 22 minutes now, you get, even right here you can see the strategy. You can see it here. You have what? You have this, your break of this transactional liquidity sweep, your break of structure, your what? Your structural liquidity, price tapped into this point of interest here. You have that move to the upside. You get, so this is basically the type B setup. You get the concept. And around here too, you can see the same thing. You have what? You have your sweep of liquidity, you have this break of structure here. You get the concept. And then when price was pulling back, we had this pullback to the upside like so, and then price tapped into this other block here. We have this move to the upside. This is what? Your type C setup. You get, this is basically a type C setup. So if you check your chart, just have to go back there. You get, on our next video I'll be breaking down the trade I took using this particular concept. You get, and around here, what do you see? You have the sweep of liquidity, break of structure. When price was pulling back, gave us this minor pullback, tap into the point of interest, type C setup. You get the concept. So as you just play around with it, you'll be able to master this in less than no time, guys. You get, so this strategy is just whichever chart you get. This is just basically advanced market structure. I would have been showing you guys this particular concept step by step, but you get, like I said previously, this video might be too long. So yes, for the sell scenario, a sweep, you get the structural liquidity, a break of this structure, price came back, tap into this particular zone, we had this drop like so. You can see it for yourself. Thank you very much. You made it up to the very video. I hope this video was helpful. Make sure you join the growing community. You get the link will be shown down below, guys. Peace, and I'll see you in a subsequent video.